You're watching Investor Insights, and in this video I'd like to talk about China. Now, China is the world's second largest economy. Technically, China is a socialist nation. Now, China has only grown to be the world's second largest country in terms of GDP because it has an asset that nobody else has, and that is a workforce that's willing to work for nothing. Its whole manufacturing boom is solely based on the foundation of slave labor. What's the problem, you may ask? Well, if you have a company that is succeeding because it doesn't have to pay wages, well, eventually people are going to revolt. It just is. All socialist regimes come to an end sooner or later, because human nature is such that when you work hard, you want to be remunerated for it. You don't want to work hard all your life, double time, triple time, quadruple time, and still get paid the same. If you don't work, you don't get paid. If you work hard, you should get paid more. It's a very simple concept. Now, China has been growing at an exponential rate the past 10 years or so. Since the Asian currency crisis of 1997, those nations like China, got Thailand's and Vietnam's and so forth, they used to be countries with huge debt, but they've learned, and now they are really powerful because they've learned to hoard money and they've learned to take advantage of its people. So you've got China that's been growing at 10%, 9%, 8% for the past 10, 12 years. So it's grown from the world's 8th, 9th largest economy to now being the world's second. Now, its GDP right now stands about $9 trillion. America's first with $15.5 trillion. Australia, for those who are interested, is about $1 trillion odd. The problem with China and the growth that people expect from China is that when something reaches a large size, it takes a lot more effort to grow. Take a look at, for example, your investment portfolio. If you had 100 grand and you grew it by 10%, you're going to make you're going to have 110 grand after the first year, 121,000 after the second year, and so on. But you know what? When you get to, say, $1 million, it takes a lot of effort to grow it from $1 million to 1.1 million now. It's a lot more effort than 100 grand to 110 grand. Just like, especially economic output of a country rising at 10% a year. Now, simple maths tells you that if you're growing at 10% a year, you double every 7 years. How do you expect China to keep on growing at such stratospheric rates? You just can't. And there's a myth out there that says that China is going to be the engine growth of the world. Asia is going to power this engine growth, and the whole world's going to benefit from it. And if you believe that, then you're a fool. Because China is merely the middleman. China is the manufacturer. it takes orders from the likes of the US and Europe. The US is about a quarter of China's exports, and Europe's about a third of China's exports. So you got two trading partners that makes up 2/3 of its export economy. The US, in terms of real growth, is contracting. Europe, its nominal growth is already contracting. Its real growth, I don't think that there's a word for it. It's got to be so deep in the red, I can't even think of a word for it. So how do you expect China to grow when 2/3 of your business, 2/3 of your trading business, your export business, is contracting? The Chinese PMI, the Chinese manufacturing index, has been shrinking for 11 months in a row. So that's telling you that the orders are coming in 11 months straight, are shrinking. And I very often ask people, who's lying? You've got Ben Bernanke, who just this week stated that America is in a very modest phase of its recovery. It's experiencing modest growth. Mario Draghi is actually upbeat a month ago, and even 3-4 days ago in the ECB meeting, he actually came out and said the worst is over for Europe. We've only got good things to look forward to. But China, through its manufacturing data, is actually telling you a different story. So you tell me who's lying. It's bleeding obvious that the US and Europe is living in fairyland. And China, unfortunately, because it is the main trading partners with Europe and America in terms of exports, how can you expect a country to grow at even 5% a year, 6% a year, already on such large a GDP number, when it's your main export partner is not putting in any orders, the orders are shrinking? Something's not quite right. But you very often hear around the financial lemming community that China is trying to change from a manufacturing, exporting country to one whose GDP is more governed by domestic consumption. It sounds fantastic. But again, it's a fallacy. And I tell you what, this is not going to end in just tears. This is just going to be a disaster. How do you get domestic consumption to be your main driver of growth in an economy when the average per capita income is $9,000 a year? How much can people spend when they only make $9,000 US a year in terms of currency weighted comparison? Americans make about $46,000 a year. Australians make about $42,000 per capita a year. The Chinese are sitting there at $9,000. You've got people who I recently watched this news article about some company, Pegatron, that was making its people live in basically squatting conditions and just run down, I don't even know what you call them, just ghetto-like conditions, so that they don't have to go home and just keep on working. A few months ago, Apple was sort of like frowned upon because it's what was it? I'm sorry, I forgot the name of the company, but this supplier to Apple had workers that were working 40 hours a week, plus an extra 80 hours of overtime for a princely wage of $250 US. These guys worked 120 hours a week. There's only 168 hours a week. Man, it's no wonder that there was a high suicide rate amongst the workers. They're killing themselves for nothing. But therein lies China's advantage over other countries as a manufacturer. It basically has a workforce of 1 billion people that are happy to work for nothing. This is not going to go on for very long. You've already got a lot of social unrest there. People going on strike, demanding wage rises, because you cannot function working 120 hours a week for nothing. You're killing yourself. So you've got to think about China not being the growth engine of the world, because it's not, and it never will be. Its people don't consume anything because they don't make anything. And the myth that somehow its policymakers can somehow turn that around is impossible. I can't see it happening, not in my lifetime anyway, because to increase domestic consumption, you have to increase per capita GDP. And China doesn't want to do that. If its people were earning more, were paid more, then China would lose its competitive advantage. It's already doing that. There's a lot more products made out of Bangladesh and Vietnam right now, simply because the wage conditions are cheaper than China. And eventually, there comes a stage where if there is a collapse over in Europe, when the collapse happens in Europe and America, then China's going to implode as well. Over and over again, I get told I'm a doomsday prophet. This is just reality. You've got a government that's trying to increase domestic consumption, but yet is reluctant in allowing companies, it doesn't want its people to be paid more. It doesn't want to lose that manufacturing competitive advantage. This is one sad story. The ending, who knows when it's going to happen, but it won't be a happy one. I don't want you to be out there thinking, well, if China is going to be imploding, are companies in Australia going to suffer, especially people like BHP who are a major supplier to them? Well, you just have to be realistic. You don't wish bad things to happen to people, but you like to warn people that something bad's going to happen. And China is just another one of those things. I can warn you about America, I can warn you about Europe, I've warned you about Japan, now China. And it just so happens that they happen to be the 4 biggest economies on the planet. Imagine how the rest of the world's going to react when the big implosion happens. Well, when the time comes, be prepared and be ready to trade on it.